Alright everybody, Stocks by the Numbers, welcome back. It is Monday, midday, it's about 12 o'clock, and I know a lot of people were looking at this one. They wanted to know how low is it going to reverse soon. Name of the company we're looking at is Take-Two Interactive Software, ticker symbol TTWO, listed here on the NASDAQ. This video game company again, we looked at this company going into earnings. I gave my personal prediction saying that they were possibly going to come in light. Either way, stock should go down. You can see earnings came out a couple weeks ago. We had a slight miss on the top and bottom line there, very slight miss on the revenue side. Boom, stock took a hit going from the 170s down into the 150s, and we looked on Friday, we saw we had this big candle up, right? And we technically were out of this little wedge that I drew out for myself here on the screen. And I said that in my opinion, I know I didn't make a video, but I was looking at it and I was saying, well, we're either going to break out now and continue to climb back up, or we could potentially pull back inside of this channel, but bounce off of this trend line. You guys remember this trend line here? This was from the bottom of November 8th, 22, connecting to the bottom of October 30th, 23. Boom, going across like that. And you can see that it stopped, it closed, it opened. It was bouncing right around that trend line, right? And then we had that big candle up, and now, boom, we got the big candle down, and we're technically back inside of this little descending wedge. So we have to see obviously now if it wants to stay in this wedge and continue to go down, or we can see tomorrow if it wants to pop back above this trend line, in which case, in my opinion, it would just kind of cancel out this wedge that I drew out, and it may continue to kind of slowly step up that trend line. But in my opinion, if this stock kind of stays where it is, then chances are, I'm going to say, in my opinion, I feel it's going to stay inside of this wedge. And see, this apex down here, this is rough. This is rough because, in my opinion, I'm seeing a couple of bouncing points here. And we can see like a lot of action taking place like right around here, like this 141-ish level right here. You can see a lot of tiny candles bouncing off of and resisting at this level. But also here, more importantly, see, let me zoom in here. You see how you have some of these candles here? I mean, technically this isn't, you know, it might not be exact as you see. Even this isn't even a straight line for some reason because I'm like a spaz. But basically like this 135, this 135-ish area in my eyes looks like a key level. And see this little candle coming down here, the way it stopped right there? What are we looking at? That opened 153.53 and the close 153.84. So yeah, I'm looking for like wait a minute. Wow, my apologies. That's 135. Woo! All right, I might need more coffee. I apologize, but okay. So we opened 135.53, closed 135.84. So the high 135s, low 136s, in my opinion, is where this stock could possibly go if we stay in this descending channel. And as you see, like as we approach like that mid-low 136 mark, we're actually right near that apex. So we might not necessarily come all the way down here to roughly 135.5. And we may potentially come down here, like I said, maybe 137, 136, and then we begin to pop out and break out of this wedge. But the next level, yeah, would be basically the top of this candle right here, which is high 141.96. Yeah, that's good enough. 141.96, right? So here are a couple of levels, in my opinion, that I personally would be watching on TTWO. Yeah, 135, that's fine. Like I said, I'm just trying to give you a general idea, because we know even when we look at support levels, resistance levels, we look at, you know, where the consolidation area was, like, you know, sometimes we'll throw out a price target. Oh yeah, 142.15, and then the next thing you know, the stock's at like, you know, 140.15, and it's like, wait, I thought it was supposed to bounce. Remember, a key level is a key level, but it's not necessarily a guaranteed price, right? Because people ask me all the time, oh, how low do you think this is going to go? How high do you think it was going to... Even something like Hershey, perfect example. I know sometimes I keep going back to the same companies, but, you know, it's just an example that pops into my head. If you remember Hershey, we were looking at that that kind of all-time support trend line. And what I say, I said technically the bottom of the line is like 180. I said, but we can like flash crash through it for a point or two before we rebound and start climbing up. And Hershey, if you remember, it dropped to like 182-ish, 181. And in my opinion, I was like, yeah, it's too low. It should bounce now. And it ended up just flash crashing real quick through that line down to like the 178s. And then it pops right back up, back into the 180s, right? So again, that's the point. My piece of advice personally to you, in my opinion, would be you want to get a general idea. But again, chances are you're not going to have the outcome that you ideally think you're going to get, which is going to be getting in at an absolute bottom at the best possible price and then selling right near the absolute top when it hits that price target perfectly. You understand what I'm saying? So the idea is just to look at all of these different viewpoints here, all of these different technicals mixed with your fundamentals, of course, and just try to make an educated decision moving forward. So again, in my opinion, if we continue to stay down here, I think next stop's going to be right here in the low 40s, then potentially the mid 130s. But again, we broke up above this trend line and then we just immediately pulled back below it. So we have to see now if it pops back up tomorrow, right? Because again, then we'll be out of the wedge and we'll technically be back above this trend line. So on the technical side, those are a few things that I'm watching. Now, I know people are pretty pumped about this GTA 6, and I know they said that 2025 is going to be the release date. If memory serves correct, we have rappers coming out of left field all saying, look, rapper confirms appearance in GTA 6. I'm going to be on there. Don't even trip. So I guess we're going to have some rappers in there. I saw an article about T-Pain. I think T-Pain's going to potentially be in the game. As you see, TTWO's private division. Okay, this talks about another little app. And what's going on, excuse me, what's going on here is I feel like people are kind of warning, I wouldn't say warning, but they're just letting everyone know that some of these other sales are dwindling. We have, some other games that are doing a little better than expected, but some of their other flagship brand name franchise titles have been seeing a little bit of a drop in sales, and I'm referring specifically to the NBA titles, NBA 2K, and of course they lowered their they lowered their guidance moving forward, I believe, but the NBA 2K sales, Take-Two has basically been the go-to developer for the NBA titles. If you ask around other gamers who like to play basketball games, usually the go-to is the NBA 2K title, whatever year it is. But again, I'm not speaking for all gamers out there. I know everyone feels different about some of these games, but the few people that I spoke to who were pretty into these NBA 2K games, they told me that the last couple of years it's been worse than better. They always go back to many years ago, those older titles, to have a better gaming experience. And obviously that is not really a good sign. I remember a couple of years ago, people were complaining the new NBA 2K was practically, all pay to play. You couldn't really do anything. If you wanted to unlock essentially anything in the game, you had to do an in-game transaction. So, that kind of obviously rubbed people the wrong way. But we have just kind of a mixed bag here. We have some increases in price targets, some maintains. We have some decreases in price targets as well. This is the rapper talking about it again. I'm trying to find some of these numbers here. See, it speaks about Disney making a $1.5 billion investment in Epic Games. So we know that the video game industry is a multi-billion-dollar industry, and now we're seeing a lot of consolidation, which would in turn cause more competition for a company like Take-Two. Because again, you had a company like Epic Games, they're the ones who make Fortnite. And now obviously, like I said, you have Disney making a $1 billion+ investment. You have Microsoft now owns Activision Blizzard. So this is what I mean. We're having a lot of consolidation taking place in the gaming industry. And I know Activision has titles such as Call of Duty, as it says here. In my opinion, Call of Duty a little bit derivative, but I know people are hyped about it. Everyone wants to buy the new game. But in my opinion, I feel like Take-Two has been struggling. And I'm trying to, here we go, net bookings for the fiscal year ending March 25 to be, quote, a little above 7 billion, effectively a billion lower than the projection the company was giving 6 months ago. So 9%. We're moving. But everyone's still, looking at these analysts, everyone's still pretty pumped about this, looking at the longer term picture. And this is why I'm saying that with the potential lowered forecast, again, roughly a billion less they're forecasting, but also the decrease that they saw in the North American segment of their market as well. This is why I'm saying, in my opinion, I think Take-Two may actually stay down or potentially flat, not really gain any momentum for potentially the next 1 to 2 quarters before it really starts rocking and rolling again, potentially having a better second half of 24. And then, of course, everyone's going to potentially start piling in going into calendar year 25 for GTA 6 to come out. But you can see maintained overweight by JP Morgan. Cut the price target by a couple of bucks, but they're still maintaining 180. Stock right now, 147 and a half. See, it says here, Rockstar commits to a 2025 launch, and obviously, I guess we're going to take them at their word. We can't assume that the release date will be delayed by any means, but just running down a couple of analysts here. Oppenheimer analysts maintain outperform rating. Goldman Sachs maintains a buy rating. Stifel buy rating. Wedbush reiterated outperform, maintain 190 price target. Baird maintained outperform, lowered price target from 175 to 173. Oh, okay. Thanks for coming. Roth Capital Partners suggested a buy. Price target raised from 168 to 185. Okay. Oppenheimer, fiscal year 23 net bookings to 531 billion, down 4% from previous guidance, citing shifts in release dates and softness in mobile advertising and 2K24 sales. The company is working, quote, the company is working on a significant cost reduction program across the entire business to enhance margin, which in my eyes just means laying people off, which led to the removal of billion-dollar target, adjusted operating cash flow, fiscal 27. Yang wrote also, fiscal year 25 bookings target is now reduced to, quote, over 7 billion, down from 8 billion. Fiscal 26 is still expected to grow year over year. Multi-year content pipeline, updating estimates, lowering price target from 200 to 185. Yeah, seeing GTA franchise. GTA 5 reached 195 million lifetime units sold. 5 million quarter over quarter. GTA Online outperformed internal expecs as anticipation builds around the release of GTA 6 in calendar 25. Trailer was largest video launch ever, including 93 million YouTube views in the first 24 hours. So, just like when I used to look at the company 10, 12 years ago, at the time, the market cap was like a touch over $1 billion, and the sales of GTA were about $1 billion. And at the time, the company was essentially reinvesting all of their R&D into future titles. If you go back in that time frame, I remember titles like BioShock, LA Noire came out that people were also pumped about. I remember they mentioned that they had I don't remember exactly, don't quote me, but I remember the story came out talking about what they were doing with something like LA Noire, and they had, all the actors with the facial expressions, and they had 80 cameras on these people, right? So LA Noire, honestly, I never played it, but I remember at the time it got a lot of hype, and I know it has kind of a cult following. But basically Take-Two would always reinvest into R&D, right? And along those years, in the last 10 years, obviously they had some newer titles come out and gain some traction, but it was the slow, steady growth that we saw in some of their other flagship titles, like I mentioned earlier, the NBA 2K series. And now we're seeing a little bit of a decline in the NBA 2K sales, which is why I'm saying if we're supposedly just kind of going to keep our head above water and just kind of tread lightly here for the next couple of quarters, waiting for 25 and everyone getting pumped about GTA, then in my opinion, we may right now, in the immediate short term, not really have much urgency to step into Take-Two, in my opinion. Well, this appears to be largely timing related. We believe our investment thesis is intact. The initial reaction to this update is likely negative. Price target 23 multiple to fiscal 26 EPS estimates. Wedbush suggested that GTA 6 may have been delayed beyond fiscal year 25, aligning with previous estimations. Quote, we have no reason to believe that GTA 6 has slipped or will slip out of calendar 25, and we view that possibility as a remote one, particularly since Rockstar has committed to a 25 launch date. Okay, I don't know why that would even be said, but obviously if that GTA 6 release gets delayed, then the stock's definitely going to take a hit, in my opinion. Additionally, the firm anticipates success of GTA 6, projecting sales of over 35 million copies in its first year, which would greatly contribute to bookings and earnings growth. Yeah, obviously. Wedbush also noted the potential for increased engagement with GTA Online. Analysts highlighting diverse portfolio upcoming day with new mobile titles. Already scheduled Star Wars Hunters for next year. New title Match Factory from Zynga. Appears to be performing at the $200 million annual level and launched only a few months ago. So something like that is probably doing a little better than expected, right? But if you're having a greater sales drop-off on a larger title that reaches more people, like the NBA 2K title, then obviously, yeah, you know, this Match Factory, 200 million, not bad at all, but it may not exactly be canceling out the loss that you're taking from other titles. Strong pipeline, mix of online recurring revenue. Strong book. Yep, see, GTA. Predicting, quote, steady growth, supported by, quote, a larger product pipeline, increasing mix of digital and recurring consumer spending. Now, there was another article that spoke about the drop in North America. And, of course, I cannot find it. Here we go. Wait a minute. Okay. So, first, yeah, when they reported these earnings, lost 54 cents, narrower than a loss 91 cents a quarter ago. Estimates were 72-cent loss. GAAP net revenue decreased 3% year over year to $137 billion. Revenues from the United States declined 7.7% year over year to $818 million and accounted for 60% of GAAP net revenues, right? So if this is where more than half of your revenue comes from, to see a decline like that, 7-8%, that is definitely nothing to sneeze at. 1, 2, maybe even 3% if the economic environment has shifted or changed, if people need to do more belt tightening, if less discretionary funds are being spent in sectors like the gaming sector, right? Now we can understand situations like this. All right, it's going to be light for a quarter or two, you know, inflation's kicking everyone's ass, so maybe down the road, you know, they'll make it back. But 7.7% year over year, in my opinion, is definitely more of a red flag than a green flag. The rest came from international revenues, of which increased 5.2% year over year to $548 million. Right? So, again, nice that they're increasing internationally. However, the drop in a larger percentage drop from a larger number here in the States compared with a 5% move roughly on 500 million out of the States, obviously, in my eyes, more negative than positive. Game revenues, 88.4% of revenues, decreased 2% year over year to $121 billion. Advertising revenue is basically the rest of that income, 11.6% of revenue, decreased 10.4% year over year to 158.1 million. And in my eyes, the way I'm seeing it is If I was an advertiser, I'm probably trying to reach as many eyes as I can, right? And get the most bang for my buck when I give you these advertising dollars. And the problem is a lot of these bigger game publishers now may have gotten, supposedly too big for their britches, if you will. And of course, they charge an arm and a leg for these things. And, when a company like Activision Blizzard comes out with the new Call of Duty, obviously the advertising cost goes up because it's such a brand name title. So I think, in my opinion, what I'm seeing is a lot of these advertisers are probably just looking for the smaller little roads, not necessarily the main avenues to advertise down, right? And they're probably, right? So they saw the 200 million off of that other mobile game or something, right? And that's what I mean. If I was an advertiser, I would probably aim for a game like that, which probably costs me much, much less than trying to advertise, connected to an NBA 2K title or Call of Duty or Battlefield, right? These are brand name titles in the space, so obviously the advertising dollars are going to be much higher. So I think, I think, in my opinion, looks like the advertisers are potentially aiming a little bit smaller. So we'll have to keep an eye on that as well in the next 1 to 2 quarters and see if that recovers. Bookings declined 3.2%. Bookings from the United States declined 9.8% year over year to 786 and accounted for 58%. The rest came internationally, which increased 8% year over year, right? So still a larger decrease off of a larger number compared with a smaller increase of a smaller number overseas. Here we go. Virtual currency, add-on content, in-game purchases, advertising decreased 7% year over year. Recurrent consumer spending suffered from weakness in mobile advertising and NBA 2K. Recurrent consumer spending for Grand Theft Auto Online virtual currency increased notably. People love GTA. That's, it is what it is. GTA Plus membership also increased significantly. Games including NBA 2K24 and 2K23, Grand Theft Auto Online, GTA 5, Hyper Casual, Mobile Portfolio, Empire... were the major contributors to top line in the reported quarter. GTA Online, GTA 5, Red Dead Redemption series exceeded Take-Two's expectations, right? NBA 2K is not in here. The company witnessed softness, in mobile advertising and NBA 2K24. So literally in my eyes, what I'm seeing here is, I personally never played Red Dead Redemption, but I know it's very popular and people like it. And from the gameplay that I saw, it's basically essentially all very similar to Grand Theft Auto, except, it's a Western, right? So if you enjoy GTA, you probably bought the first 1 or 2 Red Deads, right? And now there's also Red Dead Online or whatever. So, now it's basically just an offshoot of a pre-existing market. However, of course, for people who, want to ride horses and play an older style game, kind of, so to speak, then, they may gravitate more towards Red Dead when compared with GTA. But still a massive market that essentially you almost just like cloned on the side. So GTA and Red Dead, in my opinion, are essentially keeping this company up. Because I feel like their other titles, like the NBA 2Ks, are just starting to see big decreases. I think people might be done with it. In terms of distribution channels, digital online revenue decreased 3% year over year. Physical retail and other revenues fell 3% year over year. Digital online bookings fell 3% year over year. Declined 6.7% from the year ago quarter to 69.4 million, contributed 5%. In terms of platform revenue from mobile accounted for 51.7%, console 40.1%, PC 8.2%, these numbers respectively. Mobile revenues declined 2% year over year to 706. Okay, so this is, again, more than half of their revenue is coming from mobile, and we have a decline 2% year over year. Console revenues fell 2.5% year over year. PC and other revenues declined 10.5% year over year to 112 million. So we're seeing constant declines. Doesn't matter what platform you're on, mobile, PC, doesn't matter. Revenues lower. bookings, accounted for, yep. Mobile bookings declined 2.1% year over year. Console revenues fell 3.2%. PC and other revenues declined 9.5% year over year. Gross profit decreased 5%. Fiscal 24, the company expects GAAP net revenues between $527 billion, $532 billion. The company expects net bookings for fiscal 24 between $525 and $53 billion, lower than its previous guidance range of $545 to $555 billion. So it's about a 5% decrease than what they originally guided for. Still expecting big loss there, almost 6 cents a share. So, overall, we have a mixed bag, but again, the analysts are still kind of pumped about it. But again, that's more of like a 12-month price target. But in my opinion, I actually think, I don't know if I want to say, like, this is like 128 if we fill this gap back up here from mid-April of last year, kind of. I really don't know if it deserves to go that low, in my opinion. But again, due to the kind of weak outlook that they gave and the multiple declines in basically every segment and every platform, minus GTA Online and Red Dead Redemption, this is why I'm saying, in my opinion, I feel, anyway, that the stock should really stay stepping downward into this channel. Next stop should be about 142. And again, it doesn't have to completely go all the way to the bottom, but even a pullback here, maybe like 137 before potentially popping out and trying to break out of that wedge, in my eyes, would be understandable. And also looking at the forecast, I wanted to show you as well. See, so we just all right, so first of all, the company is not very consistent, right? So again, I know people, we get pumped. Oh no, there's a video game company. Oh no, these are the guys who make GTA. Yeah, I get it. But again, looking at the fundamentals, technically, this company really isn't doing too well. And I understand that some of these numbers are growing over time. However, looking at their earnings history here, we can see the company has only beaten on the revenue side 2 of the last 8 quarters, right? And look at these last 4 or 5 quarters here. More negative than positive, even though that's where 2 beats came in. But overall, it's more negative than positive. And remember, like this whole time frame, the stock doubled throughout the calendar year of 23, right? This is what I mean. When stocks rally 100% year to year, but they're missing earnings and not doing what they're supposed to do, then they don't deserve to be up, in my opinion. And any slight negative can bring them down. Now the company, in my eyes, sounds like they're getting hit with a handful of negatives, not just one negative. So that's why I'm saying, in my opinion, I think the sell-off continues. And we drop down to sub 40 and potentially into the 130s. But you can see the revenue stepping down here. Look, 132 billion from 134, from 144. Right? Q4, 132 billion. This time last year, Q4, 139, coming in above expectations. Quarter after that, 129. But then we start moving towards the end of the first half, the second half of 24, and you can see revenue back up 155 billion, back up 166 billion. Right? Now, if we go back to previous quarters, that's the most. Even past this Q2 of 22, if we come in here, Q2 of 24, 155 and then 166. This is why I'm saying here, in my opinion, yeah, of course, with these lower estimates, they could beat and the stock could get a pop. But in my opinion, I personally wouldn't be buying until here. That's just me personally. That's just my opinion. Because if you're telling me that they could potentially come in line, slightly beat, slightly miss, but at the same time we could potentially still have dwindling sales quarter over quarter, year over year. If they come out again in the next 1-2 quarters and say the same thing, advertising dollars are down, right? We're still seeing weakness in NBA 2K. That, in my opinion, these are all going to be factors and drivers to keep the stock down. And also on the EPS side, look, we're expecting a drop here to 13 cents a share. Then you're seeing a nice rebound off of less revenue, back up to 49 cents, but then look at the jump back up to $1.37 and then $1.39. So this is what I'm saying. This right here, Q2 24, seems to be the turning point to where the revenue is going to start chunking in, and of course the profitability is just going to shoot up astronomically here, quarter over quarter. That's almost 200% move there. So in my opinion, right here for Q2 of 24, I would potentially try to get in there. I'd time it maybe, I don't know, in my opinion, like maybe I would check in on it like 3 or 4 weeks before this earnings, and then see where it was, see how it's been performing, and then see if I can get a good entry price. But yeah, in my opinion, just wanted to show you a couple of things here with Take-Two. Let's look at stock charts very quickly. I'll let you go. And we can see that, yeah, even though the MACD really fell off a cliff and looks like it was potentially starting to curl, we got up above this 200-day moving average here of about 147.97. Now you can see we pulled back 147.61, right? So not only did we reject that trend line we looked at, not only did we now pull back inside of the descending wedge that we were tracking, but now also we have a stock below the 200-day moving average. So, in my opinion, we could continue to pull back, and that's why I was looking for what, like 142, and you can see here on the daily bottom Bollinger Band, 140.85. So this is why I'm saying we could potentially continue to pull back here before we bounce. Here on the weekly, though, we do have some tightening taking place here with the 50-day and the 200-day moving average, but you can see we rejected off this 200-day moving average, 150 even. And in my opinion, next stop should be this 50-day moving average here on the weekly, 144.51. And then potentially to the bottom Bollinger Band there, 138.61. Which would be, yeah, about halfway between those two points that I personally pointed out. But in my opinion, I do think it breaks that mid 140 mark of 145. And I think we go into the 140s. And potentially high 130s. RSI here on the weekly, a touch over 45. MACD recently crossed, heading to the downside. I do still think the sell-off continues. And let's just check the RSI here on the daily. Back up to 35.5. And now pulling, well, obviously it was around 40. And now we're pulling back here today after Friday's pop. So we could potentially retest that 30 benchmark again, which is why I'm saying, in my opinion, we may have another couple of down days here before we have a little bit of a bounce. But just wanted to point out some of the potential here, in my opinion, for Take-Two, TTWO. And I know a lot of people gave me a lot of credit because I said, again, in my opinion, they will probably go down after earnings, might be a slight miss. And I said a pull back into the 140s. And as you can see, we pulled back here into the 140s. So, you know, nailed that call. Not necessarily patting myself on the back, but just wanted to do a quick update here for you guys because I know people asked for it, and I just wanted to give my opinion on where the stock could go. But again, this is not set in stone. This is just my opinion. And for right now, in the immediate short term, in my eyes, it's this trend line we have to see. If we pop back up and reclaim, then all of this may be canceled out. But if we drop down again, do not reclaim that trend line and stay in this downward wedge, then I might be right with my lower points here, potentially moving forward. But I'm going to end it there. So once again, this is Stocks by the Numbers. I want to thank you guys for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm usually very quick to reply. Thumbs up algorithm helps me get more eyes on the channel. And of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But more importantly, moving forward, like I always say, I understand that markets are rocky and volatile and very uncertain. So I want to wish all of you success. I hope everyone makes a couple of dollars. Thanks for stopping by. Have a good day.